banks will lend a certain percentage of appraised value, 75% on single family homes. Did you just think?
Oh my gosh, no, I just realized what you're doing.
Yeah. All I'm
that's
doing is
brilliant.
just taking advantage of lender guidelines.
Hey everybody, welcome to another edition of Think Your Way to an Epic Life. And we have a repeat person that's coming to join us today. We had Robbie Faithe on this podcast before, and you can go see his other one. But we wanted to get really deep down and ask step-by-step questions. So if you have never purchased a property and you've thought about it and you've wanted to and you're scared or whatever, or if you have 1 or 2, 3, 5 investments, either way, you're going to learn a ton from this man. He has an impressive portfolio, and he's going to teach us step by step. So by the time we get done today, if you hang in with us, you will have enough information to where you can start your first investment right away. Robbie, thank you for coming.
Oh my gosh, thank you for having me. I'm so stoked to be here, and it's so great to meet all of you here on Zoom. And yeah, I'd love to offer any insights that I can to help.
Well, thank you so much. So let's start off with someone who has no money and they hear your story and they're like, well, how do I get involved?
Yeah. Well, I mean, if I could start by just giving a little background, just to give some context. Is that okay?
Please do.
So I am a broker here at Keller Williams Albuquerque Market Center, and I have the pleasure to work with Kara here in our Market Center. But what makes my business unique is that I'm not just a realtor. I'm also an investor. And in addition to that, I've created multiple streams of income on the investment side, not just from holding real estate, but from flipping real estate and wholesaling real estate. I've got multiple divisions within my real estate team so that we are able to accommodate really any type of client that we come across. So over the years, I've been able to build a decent sized portfolio. I'm growing, every month. I'm trying to buy real estate all the time. And so I've got about 338 rental units right now.
Stop. Did you hear that? Are you paying attention now? He has 338 rental units right now. Please continue.
Thank you. And it's taken me, the bulk of my portfolio has grown from about 2016 to present. So it hasn't taken me a ton of time to get there. I've really, over the past few years, have gotten super serious about the investment side. But in doing so and being in real estate, I've been able to monetize every single opportunity that comes across our desk. And so we have the ability to help any type of seller. But we're always thinking about how we can own the real estate first. First and foremost, we always try to buy every opportunity that comes across our desk rather than thinking just simply as a realtor where you're looking to list and sell the property, where it's transactional. Nothing wrong with that, but what I'd like to pour into you all today is just an insight on how we look at our business. And so going back to your question, which was?
Someone with no money.
Okay.
And they want to get involved.
Yeah.
How do they start?
Somebody with no money, how to get involved? Well, I mean, wholesaling real estate is an excellent way to get into the investing side without having to have any money. You need zero money for this. What you need to do is find an opportunity in real estate, and you're essentially controlling the real estate with the contract, with the purchase agreement. That's assignable. And so you never have to even close on the property. So therefore, you never fund it. You never close on it. You're simply just assigning your position in a contract to an investor buyer or even an end buyer who's going to buy it to live in it. And they're going to pay you a fee for sourcing that deal. And that's very valuable to investors and end buyers. And so as realtors, we have the unique opportunity where we find stuff before it comes on the open market. Listings, and other opportunities where in some cases you've got sellers who aren't looking to knock it out of the park in terms of price. And sometimes they just want a fast, easy, convenient transaction. And if it works for them and the numbers work for you, then that's an excellent way to get started. And you can make assignment fees. And we're talking about, spreads that can be very sizable. So that's a great way to do it.
Okay, let's go into it a little deeper.
Okay.
So you're a realtor, you go on a listing appointment, and you think the ARV, the after repair value, the ARV is $300,000.
Okay.
and they're happy with 200,000 and all you have to do is paint it. You, as the realtor with no money, write them a contract at that point?
That's exactly right. So you're exactly right. You need to know what the after repair value is. You need to know how to do the math on this to make sure that it is a deal. It has to be a good deal. But the idea is you contract a good deal and you leave a margin in there for an investor who will pay cash for the property and buy it in as-is condition, so you're not going through the traditional inspection contingency, appraisal contingency. That gets a little bit muddy in the wholesale business. So investors who have a profit margin built in understand there's going to have they're going to be putting in work into these properties. So they build that into their numbers. You leave them a spread and they're willing to pay you to do that for them. So what I do is I run the ARV. I figure out what an investor is going to want for a profit margin. So I put their margin in, I back out the repairs that I think that they're going to need, and then I put my margin in there, and that's my buy price.
Okay.
Contract it, and then once we contract it, we don't put it on the open market, guys. This is not you going on the market. This is you going outside. This is off market, and you're building a buyer's list of investors. You're networking and trying to find buyers that buy these types of properties, and you send it to them. And when you have an interested party, you contract it, you send it. It's an assignment contract that allows them to step into your position as the buyer. They close on it, and you get paid your fee at time of closing.
That sounds pretty fun.
It is so exciting, especially I've been a broker for 15 years. And so we all, can get a little burnt out on dealing with the emotions. It's a roller coaster.
Amen.
This eliminates the majority of that. And there's typically no inspection. In some cases there can be. No appraisal. It's cash. They're fast transactions, and they can be very profitable.
Okay. All right. So that's how you build up your cash.
That's one way. There is another method to jump right into owning real estate without having much money. It sometimes requires some money, but we've had plenty of case studies where we can do it with very low money, little to no money. And that's with seller financing, which I'm sure you all have heard about. But here's the beauty of seller financing, and I hope to talk about this a little bit more with you today. The majority of the mortgages that are out there in the United States, we're all this news about 6-7% interest rates and numbers aren't working. Well, the last statistic I heard was 60% of the mortgages outstanding are at 4% interest or under, which means it's a seriously unique opportunity for a person who knows how to do creative finance, seller financing, and take over an existing low interest rate mortgage. And you can do this in ways where as long as the seller we'll even pay a premium. We don't need a discount on the purchase price for this. We'll pay a retail price. Sometimes we'll pay above market value simply just to take over that mortgage.
Huh.
They get their premium or their retail price in the end when we perform on a refinance or a sale at some point in the future. But I'm certainly willing to trade equity for cash flow, because that's my objective.
Okay, I wanted to know that.
I know we were going to get into this too. So
okay, so that is a big question. Is it important that you pick? Can you say I want equity and I want cash flow? Is it important to draw a line in the sand and say I'm going for one or the other?
Yeah, I want both. I mean, and we all should shoot for both.
Sure.
Right? I mean, ideally, in a perfect world, you do both. And there's certainly ways once you start having money to invest into sourcing good deals and finding motivated sellers, you can spend money and you can create inbound leads where there's an opportunity to buy low transparently as a realtor and create equity and cash flow at the same time. But in this market, it's a little bit more difficult to do that. And so remember how I said we want to monetize every opportunity?
Yes.
The percentage of the sellers that want to sell at a discount, it's a low percentage. And so if you want to take full advantage of the opportunity to buy something and you can't make numbers work because ARV is 300, your buy price is 200, but the seller wants 275, well, that's too tight of a spread. What do you do? Well, that seller may have a mortgage payment that is very, very low. And so we would be willing in that scenario where we tried the cash offer, it doesn't work. Now the next step, and sometimes the first step, depending on how you approach it, is, well, I'll give you your $275 if you let me take over that $1,000 a month mortgage payment. Because what I'm going to do is I'm going to hold on to this property and I'm going to put a tenant in there, and we're going to arbitrage your rent, and we're going to what your mortgage is, and put a tenant in there for an amount that's going to be in excess of what your mortgage payment is. We'll create cash flow that way. So you might ask me as a seller, what's your angle? Why do you want to pay retail or just under? Well, I mean, the angle is we're wanting to generate a return on investment, in all honesty. We can't do it on the equity side, so I can't buy it at 200, but what we could do is we could invest our time and energy into this, hold on to it long term, and make cash flow. Make a spread on the monthly mortgage debt that you're taking over for them and what you can get in rent. That's our angle now.
Wow. Oh my gosh. Okay. So, wow. So you could get $2,000 a month.
Yeah, exactly. And now you're cash
you
flowing.
have the home appreciating.
And yeah, I mean, if you're in a market that appreciates, then you still get the appreciation. You want to line it up where, you have enough time to be able to exit the property, because there's a finite period of time in some cases, or you can do a regular 30-year mortgage or just take over the whole mortgage until it's paid off. So seller financing is beautiful because you can negotiate anything. Anything is negotiable at that point.
Right. It's as good as cash in that arena, right?
As long as it's good, if it works for the seller and it works for you, you can do anything you want.
Right.
And that's the beauty of seller financing. So this is something, if brokers are not learning seller financing right now, you need to arm yourself with the skill set on how to understand and transact with seller financing.
Okay, so you have a certain amount of your portfolio that you're buying and you're keeping, correct?
That's correct, yeah.
So from 2000 to 2020, so 20 years,
Okay.
the NAR, National Association of Realtors, says that properties appreciated 78% in 20 years. How much of that are you actually realizing now? Because you've been doing this 6 years, right?
Yeah, I started buying in 2009, but I just had a handful of properties. And 2016 is where I got super serious, and I've accumulated the bulk of my portfolio.
Okay. So do you do this is my net worth
Absolutely.
once a month, or how often do you?
Every quarter or so I check in, or anytime I buy a property, I update my Excel spreadsheet and I check in on it. But yeah, I mean, it's been exciting. In 2016, prices were a lot lower. And so of course I'm not a genius. I didn't see, the type of uptick in prices that we've experienced. But I mean, that's the beauty of real estate. I mean, you're in a unique time in real estate right now, but historically it just performs well. So you play the long game and it's inevitable wealth. So the idea is just get in the game. Don't be too concerned about equity. The numbers need to make sense, but jump in. The time will take care of the rest.
There you go. It always does. So when you're what is your buy box? Now, your buy box is unlimited, isn't it?
It can be. I have a set of parameters that I try to shoot for, but with seller financing, it's just really dependent on how creative you can get. I've got a listing appointment or a buying appointment. We'll see what it turns out to be for a $1.75 million home next week. And I'm thinking to myself, in this market in Albuquerque, to give you guys perspective, I mean, that's really high. Our medium home sale price is probably around $330,000. And so 1.75 is significant here. And so I'm thinking to myself, well, what am I going to do with this? Well, this is likely not a flip because I'd have to buy it at such a very low price. And it's just a big risk for me because I don't like to operate at that price point where it's just a narrow market of potential buyers. But I'm thinking creatively on this, if I were to be able to arbitrage a payment, this particular seller owns it free and clear. So anything and everything is possible. We could create a price that is comfortable for them. It could be a retail price, and a payment in trade for giving them their price and not going on the open market, not paying realtor commissions and closing costs. I could potentially negotiate a lower payment where I could hold on to a $1.75 million property for an extended period of time, put a tenant in there, or short-term or mid-term it, and be able to create cash flow that way and have little risk, because maybe I'm able to negotiate a low down payment in trade for giving them the price that they want. It depends on what the seller's needs are. So to answer your question, typically for us, medium home sale price, $330. I really like to, if I'm flipping something, I like to be ARV, after repair value, under 400, because I know it's the broadest segment of buyers out there. My chances of selling are just way better.
Sure.
But in the higher end, that's the option. You can get creative with it, and there's an opportunity still to, to create some value just by being able to, work directly with the seller, bypass realtors, and negotiate terms that work for both of you.
There you go. Yeah, well, you're almost going to get hit here talking about bypassing realtors, but you are one. So
I am one.
So you get to say that. He gets away with it. I don't know. Okay, so when it comes to financing, what are some ways that people can secure funds that are more traditional?
Yeah, the traditional route of, just obtaining a normal conventional loan. One thing that if you are of zero properties and you want to get in the game, certainly take advantage of an owner-occupied loan, FHA, if possible, VA, if applicable, or just a primary residence conventional loan where you can get in for very low money down and do what we call, a house hack, where you buy it, live in it as your primary residence for the period of time that's stipulated with that loan program, but then convert it to a rental property. And then you can do that once a year. So that's an easy way to start growing a portfolio if you have nothing with lower money down. That is a good way to do it. If you don't have, if you have the liquidity, but don't have the income to be able to support getting a normal traditional loan, then you can look at what's called a debt service coverage ratio loan, DSCR loan, where the underwriting is primarily based off of your ability to pay the debt back, the liquidity that you have. So if you have the cash reserves and the debt coverage, the debt service coverage ratio satisfies the requirement for the lender, meaning you have the mortgage payment is low enough where that if you're able to rent the property out, if it rents for a certain ratio of what the mortgage payment is, then they will bless the loan and they will give it to you without you having to have like W-2 or 1099 income and qualifying traditionally. So there's options out there. There's so much money out there right now. It's crazy. You can get private money, hard money, DSCR loans. You can go traditional route, seller financing, sub 2. If this is all just like, drinking from a fire hydrant, then what you need to do is educate yourself on this or align yourself with somebody who's doing this right now and learn.
Okay, so you're talking to a bunch of realtors, and we know we're Keller Williams realtors, and we also know that we also know how little we know, right? The more you learn, you realize, oh my gosh, I thought I was a professional realtor and I had no idea that there were portfolio loans and all this other stuff, right?
Yep.
So instead of feeling bad that you might not know that this stuff exists, who do they need to talk to learn about what kind of a lender do they need to befriend? The kind of lender who thinks like you do.
Yeah, well, there's a plethora of information out there now. Podcasts are great to listen to. YouTube is like a university, so you can get some really great ideas there. In your market, you just go to meetups, talk to the top producing brokers or the top investors. Rock stars know rock stars. So all you need to do is find out who's doing the business and get referrals. They will know.
And I'm assuming it's much like real estate or any other business where you're aspiring and you go to someone who is like in your mind so huge that they would never ever want to talk to you. Why is that not true? Why are they always willing to help?
Yeah, I mean, from my experience, people who have done well, they kind of have a giving mentality. They give back. They want to spend time and mentor people, and I don't know why that is. I suppose it's just maybe a gratitude thing, where they understand what the secret is, right? Right. That's what it's about. Is you give without the expectation of getting, and it's just kind of a mentality, I think, that you just organically develop over time.
Absolutely. I love it. Okay. So, what's the most creative, crazy financing thing you've ever done?
Oh, recently this is a personal deal that I took down. It was a triplex, closed last month. I bought it for real numbers here. I'll tell you, don't mind sharing, $250,000. It's worth probably about $350, but one of the units is going to need a solid 30 to 40, so I'll be into it for that plus the down payment. But the exciting part was they owned it free and clear. And so here's what I did. I gave them 3 options. I made multiple offers on this property. And by the way, this took me 4 years to buy. This was not an overnight success. This was me, and one of our core values on our team is we are just relentless. We talked about this on the last episode, actually, that we did together.
Yes.
Whatever it is that you're after, just keep on moving forward and just don't stop. You got to be just relentlessly persistent in your pursuit of whatever it is you're after. And it's just inevitable. I think you'll be successful. And so that's an example of we just continuously follow up and we never give up. And this was a party I've been talking to for 4 years. Are you ready? Are you ready? Are you ready? Not as obnoxious, but we stay in touch, front of mind. And yes, the guy called them. Yes, we're ready. Make an offer. Okay. Well, I made 3 offers. My cash price, I think we came in at the very lowest. It was like $220,000 cash. I'll pay you $220 cash. You're out of it. You get your cash all up front. I made him another offer for $250,000 owner financing with the lower down payment. I think it was $10,000 is what I ended up closing on it for, $10K on a $250 purchase, which normally, traditionally 25% down, you're like 60, 70 grand down normally for something like that. So I've got 10 grand into it, and it's already kicking off $1,000 a month positive cash flow.
Wow. Before
we do the rehab. Now I'll do rehab, I'll more cash into it, so cash on cash changes, but that's okay. The third option that I gave them was a higher price, lower payment. So they went with option 2, which was a little bit higher payment, lower purchase price. And so I find that the point of me telling you this is you give sellers options and say, I'm going to make you 3 offers. It's more of a tendency to pick one than to say, no, I don't want to do that. It's more of like the paradox of choices. They're like, okay, well, now I've got choices. I'm going to pick one of these that works for me.
That's brilliant.
So
was that original, or did you learn that from someone?
I kind of just inherently have always done that, but I think I heard it on Bigger Pockets one time years ago. I may have gotten it from Bigger Pockets. I don't know that I can take credit for that. But
so Bigger Pockets, guys, is a podcast that if you are all interested, you really need to subscribe to, for real.
Yeah, absolutely. That has been the overarching reason why I've been able to create the portfolio that I have.
Can I stop one more?
Yeah, go ahead.
Okay, so the Bigger Pockets has a property analyzer. I'm sure you don't need that at your stage.
Used it, yeah.
Is that something you would recommend to somebody who's starting and
Sure.
and doesn't have the experience that you do?
Absolutely. There's gurus out there. Anybody and everybody has their own calculator. Mine is so basic. It's just an Excel spreadsheet. But certainly,
okay.
As much information as you can arm yourself with. Absolutely.
Okay. Sorry to interrupt.
Yeah, no sweat. And so that's a big reason. And the way that I was able to grow the portfolio, I think it's important just to touch on this. It's not been a matter of me just buying properties, putting cash in, pouring cash into it, saving up money, pouring more cash into another investment, and doing that a bunch of times. I've used the same dollar over and over and over again. I've recycled my initial starting capital over and over through a series of refinances, which I'm sure a lot of you have heard about. The term is called the BRRRR strategy. This was the game changer for me. If you get nothing out of today, you need to know this. The BRRRR strategy is the most critical strategy for you to grow a portfolio quickly. It requires you to buy at a discount. So essentially what you're doing is you're buying property below market value, and banks will lend a certain percentage of appraised value. 75% on single family homes. Did you just think?
Oh my gosh,
What?
no, I just realized what you're doing.
Yeah. All I'm
that's
doing is just taking
brilliant.
advantage of the lender guidelines, and you can buy a property for cash or you can finance it regularly. If you pay cash, there's a delayed financing program where you can refinance it right away. It doesn't have to be your cash. It could be HELOC money. It could be private money. But the point is, let's go back to your $300,000 purchase, okay? $300,000 ARV. Okay, if you take 75% of that, you're probably like 220-ish. I don't know, it's not exact, but you guys can do the math on it. We're gonna buy it for 200. That means, let's say that 75% is 220 or whatever that number is. We'll call it 220 for now. 75% of 300 is 220, or whatever the actual number is. But we bought it for 200. Let's say that in a perfect world, our rehab costs $20,000. You get where I'm going with this? What I'll then do is I'll buy it 200, put the rehab money into it, then I'll get a loan for $220,000 because that's the max they'll lend me, and I extract out all of my capital, and then I go and recycle it into another good deal.
Gosh.
And I've just done that over and over and over again, and that's the main strategy I've used.
Oh my gosh, it's brilliant. I mean, it's absolutely brilliant. OPM?
OPM. Yeah.
Other people's money. I haven't thought of that term in forever.
Yeah.
It's like all these little things are firing
all
off.
just like-
Synapses. How important is it to have a good credit score to do what you do?
It can be. It depends how big you want to go. Certainly traditional financing, you got to credit qualify, right? So it's not a prerequisite. You have horrible credit or no credit, you could do wholesaling, or if you want to start owning real estate, seller financing. You don't need good credit for that. Now, what you need to think about is if you have like a finite period of time to sell the property or refinance it and exit out, whatever your balloon date is, then you need to be in a position to credit qualify, unless you could pay cash or sell it at that point. So it's important, I would say, overall, yeah, but it's not absolute necessity.
What are some of the things that people should really think about if they're about to start investing that you haven't thought of telling us yet? Are there any pitfalls that...
Oh yeah, there's tons of them. I mean, this has not been a straight line progression. It's been, a little bit like this, and it's not every deal goes as you plan. So you expect the unexpected. I always try to stress test my numbers. I think that's critical. If you're brand new at estimating rehab, then certainly build in a contingency. Get multiple contractors to go bid it, and even with that, build in a contingency. Expect that your ARV is going to be lower than what you're expecting, what it could be. And so that's what I mean by stress testing. Have an idea what the numbers are going to be, but play with the numbers in a way that if you can't sell this $300,000 ARV purchase that we just made, what now? Well, real estate is forgiving like this, and you can do more than just sell property. You could convert it to a rental property and rent it out. So have a plan A, a plan B, and a plan C. Find a mentor. Probably one of the most critical things that you could do is find somebody who's where you want to be. It's that simple. And go do whatever you can to be around them. I pay big money to be around people that are doing big things. I pay to be in big rooms. And if you have money to spend, then you can accelerate the learning curve a little bit. I do believe in that. I believe in paying for coaching. I believe in paying for mentorship. But whatever you can do to be around somebody that's where you want to be is critical.
Mm-hmm. You become like the 5 people you spend the most time with.
So true. Yeah.
And absolutely. And it is one of the best investments. One of my coaching clients, and I don't think she's on here, but Ryan Major, When I got her, her goal was 15 million that year. This past year, she became a millionaire real estate agent.
All right.
And she had the opportunity to join Her Best Life. And at the time, it was $25,000 to join it. And she said, what do I do? And I said, it'll get you in that room. Go do it. You know, and now she's a millionaire real estate agent, and that 25 grand is nothing, right? Like, it works. You need to.
People don't think about investing in themselves. You know, Warren Buffett, I saw something the other day. It was like, what does one invest in when all falls apart and this market turns, the economy crashes? What do you invest in? And he said, invest in yourself. And we don't think to do that. This is a literal investment where you should quantify a return on investment from coaching, from mentorship. So, you know, people think you're spending money as an expense. Nope, it's an investment.
Mm-hmm. Oh, yeah, and it pays so richly because we can't be objective about ourselves. We really can't. We need someone else to just be able to talk it through. And we realize it's usually you that realizes what you need to realize by just having someone to bounce it back and forth with. Yeah. So speaking of people and all that, partnerships, good, bad, in your industry, do it, don't do it.
Oh, I mean, it's like a marriage. It could be good or bad, right? So it just depends on who you marry. And so I do both. I mean, the majority of what I own on my own. I'm getting into some bigger commercial transactions, a couple development deals, and this is way above my pay grade. I don't know that stuff. I'm learning it, but I have partners that I trust, that we do business with, and so I think they can absolutely be great. And so my experience with it is I've had good partnerships and I've had bad ones. Is I think it should be very similar to marriage and dating. It's like date a little bit first, do some transactions, interact with each other, see how that goes, and if it starts working and coming together, well, next step would be then you get married. At that point, you create the partnership and do it the right way. Have an operating agreement that stipulates what happens when it hits the fan. Mm-hmm. You know what I mean? What
Not
happens?
If.
Yeah, right, exactly. Profits are great. What happens to profits? But what happens to losses? Are they split equally? I mean, so operating agreements are critical. Don't skip that part. Do it the right way. Get an attorney or consult with somebody who can educate you on what that should look like to protect yourself. So I think they can be great, but I mean, operate with that understanding.
Okay. Just go in with your eyes wide open.
Yeah, that's a great way to put it.
Yeah. And don't risk anything that you can't afford to lose, probably.
Yeah.
Right?
Yeah, that's an excellent point. That's a really good point. There's risk with this, right? And so certainly, I mean, there can be some downside. And so think about that, and you know, what you put up, you could be lost, but I think that in real estate, you know, the odds are more in your favor so long as the timing works and, you know, you underwrite the deal correctly. Mm-hmm. But yeah, I mean, you've got money at risk. This is risk, and this is why we deserve to be compensated the way we do.
Amen, brother. Preach it. Go ahead now.
Yeah. Well, I will. I'll tell you. I mean, there's some fees that we make on wholesales that it'll make me blush a little bit, and I feel sometimes I'm like, dang, that's like a lot of money. I'm not saying this to brag or flex, but genuinely, I'm like, but we just solved a major problem for a seller, and we operated with integrity, and we were upfront. And so this is not me coming in or my team going in and saying, hey, we're going to take this $300,000 property. I think it's worth about $200,000. $200,000 is our offer. That's not how it works. We say, look, this is probably $300,000 fixed up. Want you to know that. It's not in its current condition right now, probably maybe around $250,000 or so, but you need to know that you're leaving money on the table if you sell to me at $200,000. But the benefit is I'll pay cash. We can close very quickly. It's as is. You don't have to have a bunch of showings, go through inspections, have an appraisal. If that sounds good, then we can certainly do this deal. But I need you to know that you would net more if I were to help you sell it on the open market. And you have that conversation with the seller. They're like, are you serious? Yeah, I would love to work with you in any capacity. Right. I don't know if I'm going to sell it to you for $200,000, but you just basically told me not to sell the house to you. And you know what they're going to want to do? They're going to want to sell the house to you at that point. So we totally operate with integrity. And it's critical, especially as licensed realtors. You've got to conduct yourself in that way. But you'd be shocked how many people out there, even when they have equity in a good market, how many people are willing to trade price for speed and convenience.
You know, we are in an instant gratification society.
Yeah, yeah.
100%. And so I'm so grateful that you brought that up and that you're being so transparent, because I don't know about you guys, but maybe the first time you got one of your big fat real estate checks, right? It was like, ooh, gosh, you know, but what the world doesn't understand is you tried to close 10 deals that month and you only got that one, right?
Yeah.
So it is, I truly believe that you cannot bring in more in life than you put out in service, unless you're doing it illegally, and then your whole life is going to be horrible anyway, right? But
well said.
But seriously, whatever is coming to you, or any of you, whatever is coming to you, it's because you have put out that much in service, and that's what it's really about.
Yeah, it really does work like that.
Yeah. So you already talked about this a little bit, maybe a little bit more detail. When you buy a property, how do you decide, I'm going to do this with it, this with it, this with it?
Yeah. This is a question I get all the time. There's not really a clear-cut answer on this. Some of it is just, you're just going to have some intuition on this. I mean, there's some critical factors. Location is always the biggest driver for me. If I can send my wife to the property at night, feel safe, we bought it at a good price, and we feel like in the location, the reason why it's important is because there's the biggest potential growth for rent. And so for me, I'm replacing my income as a realtor. I want that to become much greater than what my current income is as a realtor. So I'm looking for cash flow. And so if I feel like there is a serious potential for growth, if it's in the path of progress, in a great location where you've got built-in demand and perpetuity, then that's probably a good long-term hold.
Okay.
If it's in an area that you don't feel comfortable with, there's maybe a higher risk factor in working on a property. If you're going to close on it and rehab it, you've got a potential burglary, theft issue, there's stress that's involved with that, then hey, it may not be for you, but somebody wants it. And so that could be a great wholesale opportunity where you still move forward with contracting it and you sell it, and you're still able to capitalize on it by assigning it to somebody who does have value in this area. Right now, truthfully, it's hard for us to make numbers work on some of these deals. I'm not talking about purchase price. We're always buying good deals, buying right. But the objective is not to flip all the time. Because that's very transactional. It's the same thing we're doing as brokers, potentially with larger spreads, but larger risk. And so my primary objective is to hold real estate. Then I'm always trying to see if I can own this long term and if it makes sense. With interest rates the way they are right now, it used to be that there was a little bit of a spread on the cash flow and it made sense, but it's becoming more difficult right now. So reverting back to what we talked about with seller financing, we are very much focusing on really trying to push that methodology for purchasing, because that is the serious opportunity. But in some cases, you're in the right location. The numbers don't quite pencil in a long-term hold because it's breaking even, but great potential rent growth and possible appreciation because it's located correctly. Then now you've got short-term or mid-term options.
I was going to ask you, do you do those as well?
I really don't like the idea. I've done short-term, and I know I'm leaving money on the table by doing long-term, but my objective right now is to scale. So I need to get them off my plate to my management company so they can handle it. I'm out of the picture. I just look at the monthly statements. But there are some really good properties that I'm like, God, I could flip this thing, but this is such a great property. I could just hold on to it. It doesn't make sense now, maybe 5 years, but hey, what if I did short term? What did the numbers look like? What does midterm look like? Traveling nurses, studio film people here in Albuquerque, we get a lot of that. And so the numbers look a lot better, and it's definitely a viable business model. You just need to be prepared to take it on because it's more management intensive. It's not just handing it off to a management company and say, hey, do a short term. Most won't do it. Bigger markets that some of these folks are in probably have management companies that will do short-term or mid-term, so I would look into that. But that's the alternative. Doesn't work on long-term, you need to look at short-term. Short-term is 30 days or under. We're talking Airbnb, VRBO, nightly rentals. That's the best way to get the most amount of money.
What percent regular long-term rental Airbnb? How much percent
For
more
me?
in general?
Oh, shoot. That's a good question. I mean, I would say at least 20%, 30% more. You'll pay more in management. I mean, it's very specific to the property, how many bedrooms it has, what location it's in, what characteristics it has, and what market you're in. But it's decent. It's a good chunk more, and it does make a lot more sense. But now you're in the hospitality business. You're providing toilet paper and coffee, paper towels. Where's my coffee? You guys are out, and I'm not interested in doing that. Now you layer it with management that handles that in-house or otherwise, then you're out of the picture. Midterm is a great go-between. Midterm is 30 days or more, 30, 60, 90-day increments. A lot of traveling nurses like this, business executives, corporate people. They need a furnished place for extended period of time, but not a full year, and they'll pay for it.
And they're more professionals, so they take better care of the property. I'm assuming.
In theory, I suppose. I've heard some horror stories on both, but
okay.
But yeah, that is an excellent way. And now I'm like, there's 2 that I bought this week, actually, that I'm like, I should probably look at midterm on these. And so I'm now looking to find somebody who can be in-house to help me manage that, because we're just so busy that I don't want to overload my whole team. But that is an excellent idea. There's multiple options, short-term, midterm, long-term. And so you can make numbers work, even right now, I'd say, with high interest rates, just by utilizing different strategies.
Gosh, this is so fun. Just to get inside of your head, because people don't think this way, right? They're just thinking survival.
They're thinking as a realtor, and they're one-trick ponies. And one of my mentors told me, you need to not be a one-trick pony. This market turns. The beauty of investing is they can be negatively correlated. The market turns. Things are taking longer to sell. Sales volume goes down. Well, there's more opportunities to buy at that point. You could probably buy a little bit deeper, which means that there might be an opportunity to invest. And so I think that every single realtor should know how to do all of this, because it's all real estate related, and you're just providing solutions to people who want to have you solve their problem.
Okay, so that just like perfectly leads into this last question. Are you a better realtor if you're also an investor?
That is a great question. And I would put myself out there and I'd say yes. I think that absolutely. And the reason why is because the more you know, you're getting hired for the value and the knowledge that you provide. The more you know, the more valuable you're going to be. The more versatile, the more marketable you are. I feel like you get more perspective. You got a different lens to look through. And so in my listing presentation, I go through this with every seller, even if it's just a listing and I know it. Tell them I'm an investor also. What does that mean for you? Well, I've got more reach than your average realtor. I've got buyers that are buying houses directly from me, cash buyers. We've got relationships that we've been developing over the years that do this, this, and this with us. Your standard realtor doesn't have that. Would you say that's more valuable?
100%, guys. It will absolutely. A doctor should have to be a patient.
Yeah.
You know, realtors need to buy, they need to sell, they need to move. They need to move. I'm saying this and I don't want to move. I am so happy in my house. I've been there for 10 years, but I know I can't be that great of a realtor if I don't understand the stress of packing up and moving, right? So yes, you need to invest. I feel like to be a really great realtor, well, and also, do you believe in what you're selling?
Right.
What is the difference?
Right.
What is the I'm going to mess these numbers up, but they're very, very close. You can Google this. But I believe that a renter's net worth is like $1,500 or something. And the average homeowner's net worth is $300 and something thousand. Come on, right? It's so amazing when you see it happen yourself, when you see that you paid for something and now Like let's say you own a $200,000 house and you have paid for that $200,000 house and someone is paying you $2,000 a month. Why would you sell that house? Because you're going to get $2,000 a month, and at the end you have nothing, right?
Right.
Once you own it, and it pays you for the rest of your life.
Right.
Yes, I think it's imperative. If you believe in it, if you believe in what you're doing, you're going to invest, and you want to. You know you need to. So Robbie, somebody really, really wants to, and they're just so scared.
Yeah.
Last pieces of advice for them.
Well, I would say, there's a disease out there. It's called analysis paralysis. And I must admit that at one point, I was very afraid to pull the trigger on my first multifamily property that I bought. And so you just need to get in the game. It doesn't mean buy a bad deal, but it means, if it fits most of the parameters, you're going to be your biggest bottleneck. You need to jump in and you need to experience it, because once you do that, it's going to be so much less obscure to you. You're going to get more comfortable with this. And, I feel like that's what stops a lot of people, is they don't end up jumping in. There were people hesitant on the sidelines in 2017, 18, thinking the market was going to crash. And had you bought then, think about what your net worth was going to be. So, I think you need to understand that, like I said, stress test the numbers. Even if you pay retail, if the numbers make sense, then why would you not? There's so many other benefits we didn't even talk about. You get the cash flow, you get the appreciation, you get depreciation, which if you're $1 million real estate agent or more or less, and you're still a high income earner, we have a unique benefit where the tax code is set up for us, where we're real estate professionals. There's tax implications that highly benefit you, where you can take paper losses that could offset your active income and allow you to keep more of your taxable income that you can reinvest. Year over year over year, you do that over a period of time, and your net worth will just exponentially grow. And so it's not doing one thing, it's just continue to do what you're doing. I don't want to overwhelm people and say, I'm never going to get there. Do it one step at a time. My journey has been one transaction at a time. And so I feel like you just all need to be pushed a little bit. Maybe you're all doing this, but I don't mind giving my team a little tough love and saying, come on now. What's stopping you? Let's go. And so I don't mind doing that, but I think you need to get in bigger rooms, continue to, get coaching and mentorship, and, it's just, it will happen. There's markets out there, you might all know about this, where you could buy a turnkey home on market where you're not having to buy a good deal. Like I told you, like you have to buy a good deal. You could pay retail $60,000, $80,000 and they rent for $1,200 to $1,400 a month. And so those, it's like, if you can figure a way to scale that where you've got a team in these markets, property management, contractor, a broker who can help you evaluate deals, someone that you trust. If you start putting your team in a market that makes a little bit more sense than when you're at, then you can grow somewhere else. I've yet to implement that. That's next for me. So I'm glad you mentioned that.
I am so grateful that for everybody watching, and you're seeing and you're thinking, this dude has it, he's got it. He's done, right? He's got it. He's got everything he needs. Yet no, he's still growing. Yeah, you're still pushing beyond your comfort zone. Do you expect to do that your entire life?
Oh, yeah. How should I put this? I'm nowhere near where I expect myself to be.
Yes. That's what I'm talking about. That's it right there.
I've always been very ambitious and driven, and I'm not, I don't think I'm special in any way. I don't think there's anything special about me. It's just that something in me drives me, and
Not even the hair?
Maybe the hair a little bit. You're so funny. I just want a big life. We all want a big life, and there's no reason why we shouldn't have it. Like, what in the heck is stopping us? We all deserve it.
Yes.
There's no boundaries. I genuinely believe that. And so why not go after it? Why not look in the mirror and say, are you going to be the person? Are you going to be the person that goes for it? Are you going to go for it? Are you going to be the man or the woman in your family that changes the family tree forever? And for me, the answer is yes. I want to be the one to change my lineage, and that's what pushes me.
All right, so that's a lot. So Robbie, what else do you have going on?
Well, aside from all of that, as you can see, I'm passionate about talking about real estate. I just love it. And, we're able to help a lot of people right now. And so because I'm getting a lot of inquiries, I've created a coaching program where we'll work with individuals really at any level of their business. We have realtors in the program, we have non-realtors, but if people want more hand-holding and want accountability and somebody that they can go to in person and say, hey, I've got this deal, what would you do with this, what would you do in this scenario, then they'll be able to have access to my coaching program. We provide contracts, assignment contracts, JV agreements, which we didn't talk about, deal calculators, and we do a weekly coaching call once a week. And so if any of your, the viewers would like to have information on that, they can reach out to me.
Absolutely. Do you have a website or anything in particular?
Yes, it's robbiefaithe.com.
Okay.
ROBBIEFAITHE.com.
Okay.
And we'll have more information too on Instagram on my profile, which is Robbie Faithe Realtor on Instagram.
Okay, outstanding. Let me tell you guys, I have no idea how much his coaching costs, but you need to be willing to pay double. And I mean that with all my heart, Robbie. I mean that there's the value of having a mentor is literally priceless, and having a mentor like yourself that genuinely cares and will steer you the right way to where, yes, it is very profitable, and yes, you are doing everything above board. You will not be steered wrong by this man. So thank you.
I appreciate you.
Thank you.
It's always a pleasure to talk with you, and thank you so much for letting me be here.
Oh gosh, thank you. Thank you for sharing all of your information. Guys, seriously, take what you've heard today and do something. Do something. Take one step towards owning a piece of real estate that will pay you for the rest of your life. So check it out. Thank you.